Richard, thanks for joining us. Really appreciate it. Okay, does it continue as long as the Fed's in the market?
Well, it can't continue at the pace that we saw in March, April, and May, because those are just record-breaking levels. I think if we get any kind of volume that we expect in June, we're going to have the best quarter in terms of volume ever, and we could end June at total issuance for the 6 months that exceeds all of 2019. So look, I do believe that everything you're seeing in the marketplace right now with in terms of demand, with everyone seeming to be risk on, as you can see in the equity markets, the demand will be there. I just think it's going to be difficult for us to maintain this level of supply for an extended period of time. Lots of companies that really wanted to tap this market needed to shore up their liquidity have done so. There'll be some to come, but if we want to have decent volume in the second half of the year, I think we're going to have to see a shift to acquisition financing.
Speaking of, Richard, acquisition financing, the leveraged loan market is still below par. What are the limitations of the Fed's support?
Well, that's a great question. Yes, as you know, the Fed support for the non-investment grade market is really is only focused on companies that were investment grade prior to COVID. Right? There's a date, I believe it was in March 22nd. I'm not sure if I have that date correctly, but it's around that date, where if you were investment grade prior to that and then you were downgraded because of the pandemic, then the Fed will be there to support you. So, new acquisition financings in the leverage space are not going to be supported by the Fed, but there's an implied level of support because if the Fed is taking care of a lot of these fallen angels, that allows the leveraged investors to focus on purely leveraged names, and they don't have to worry about the overhang from the fallen angels. And so that implied support has really caused the rally, first in the high yield market, and we've actually seen a rally in the leveraged loan market. I think the last time we spoke a few weeks ago, I told you that I thought the leveraged loan market was going to be the laggard, and it has been, but it has recovered much more quickly than I expected. And while it is below par, it is coming back to more reasonable levels, and we're seeing the first announcements of new LBOs. There was a transaction for MásMóvil in Spain announced yesterday or the day before.
Right.
So you're seeing the first new LBOs coming back, and that has a lot to do with the fact that the leveraged loan market has come back stronger than people expected, including me.